Hello, good day, guys. My name is Nick, technical analyst for SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the Eurozone to the Great British Pounds. And as usual, we will be talking about fundamental analysis before we move right down ahead to technical analysis, which is purely what we're going to be seeing on the chart. And of course, we have noticed that Euro GBP on the 4 hours time frame has steadied around 0.8350, as investors, of course, await the release of multiple economic indicators. While the UK's unemployment rate may remain stable, while average earnings are expected to elevate, of course. And the ECB may prefer an interest hike despite a flat German HICP. We have noticed that the Euro GBP pair is auctioning in a narrow range of 0.8349 down on to 0.8353 on Tuesday, ahead of the release of multiple catalysts, which may guide the market participants for the direction. And the crosses are awaiting the release of the UK's unemployment rate and Germany's consumer price index CPI. And the quarterly UK jobless rate is likely to land at about 3.9%, similar to its previous print, while the average earnings, of course, excluding bonus, may print at 4% higher than the prior figure of 3.8%. And higher average earnings in a tight labor market advocate progress in achieving full employment. And however, it will be too interesting to watch the extent to which the increment in average earnings will be able to offset the soaring inflation in the UK. Meanwhile, the shared currency is likely to remain uncertain on the release of Germany's harmonized index of consumer prices, HICP, and the preliminary estimate for yearly Germany's HICP shows that the economic data will remain similar to the previous print at 7.6%. It is worth noting that the European Central Bank ECB has not raised its interest rates since the pandemic of the COVID-19, while the Bank of England BOE has raised its interest rate by 25 basis point BPS consecutively after a 15 BPS rate hike in December. And the BOE is expected to elevate its interest rates further to tackle the soaring inflation. Now, what to expect from this technical analysis, purely what we're seeing on the chart. We have today's last price to be at 0.8354, confirming this from our 1 hour time frame too as well. And of course, the total daily change has been about 0.06006% and total daily change average of 0.07. And the total daily open has been at 0.8348, of course. And the daily SMA 20 has been at 0.8381, while the daily SMA 50 had been at 0.8371, and daily SMA of 100 has been at 0.8399, while daily SMA 200 has been at 0.8463. So what to expect from the currency pair today? We have noticed two double whammies here, and here, and now we are expecting a push up to the upside. The most recent resistance being at 0.83791, and an estimated reach out to this zone means a breakout could possibly be in the book and heading up to a new zone at 0.84550, which is about 100 pips from that entry point. So if we're to make an entry from this point and extend to this point, the most recent, rather the latter resistance point after the most recent resistance point, we're looking at nothing less than 100 pips from that trade, of course, which is good money. So that's our technical analysis on today's currency pair, the Eurozone to the Great British Pound. So I remain your host, Nick. Bye for now. Also, today we'll be taking a look at stock outlook, and here we're talking about Nokia, and we have been noticing a decline in the commodity, and of course, this has been as a result of the fact that Nokia are looking to stop doing business in Russia, and Stockholm Telecoms equipment maker Nokia has been pulling out of the Russian market. Its CEO told us that going a step further than rival Ericsson's, which said on Monday was indefinitely suspending its business in the country. And hundreds of foreign companies are cutting ties with Russia following its February 24th invasion of Ukraine after their Western sanctions against Moscow. While several factors, of course, including telecoms, have been exempted from some sanctions on humanitarian or related grounds. And Nokia said it had decided that quitting Russia was the only option. And we just simply do not see any possibilities to continue the country under the current circumstances, as CEO Pekka Ludmog has said in an interview. And he had added that Nokia would continue to support customers during its exit and it was not possible to say at this stage how long the withdrawal will take, but Nokia is applying for the relevant licenses to support customers in compliance with current sanctions. It said in a statement, and both Nokia and Ericsson made a low single-digit percentage of sales in Russia, where Chinese companies such as the Huawei and ZTE have a bigger share. And we should know, of course, that Nokia doesn't expect this decision to impact its 2022 outlook, but it would lead to a provision in the first quarter of about 100 million euros, which is about $109 million. And Russia is also at loggerheads with Finland and Sweden, the home countries of Nokia and Ericsson, respectively, over their interest in joining the NATO military alliance. Russia has also been pushing for companies to start building networks using only Russian equipment, seeking to persuade Nokia and Ericsson to set up factories in the country. And Lundmark said that Nokia would not implement a plan announced in November to set up a joint venture with Russia's Yadro to build a 4G and a 5G telecom base stations. Nokia's decision to leave Russia will affect about 2,000 workers, and some of them might be offered work in other parts of the world. And Lundmark said Nokia has about 90,000 employees global. A lot will have to change before it will be possible to consider again doing business in this country. Now, what has this outlook got on the Nokia commodity? We have noticed a sharp decline right out of the zone, and it's most likely going to be like this till the next 48 hours or 72 hours. And we are noticing if we are making an entry on this at 5.27 and let the trade run up to the 4.97 zones or 4.60 zones, we are noticing nothing less than 50 pips and even more from that trade, of course, which is good money. And an estimation of that means close to 60, 70 pips, of course, from this trade. And this, of course, would be a safe haven for all stock investors to come and make good money from the decline of the Nokia Corporation. That's our technical analysis on today's commodity Nokia. I remain your host, Nick. Bye for now.